Hey guys, welcome back to another episode of Bitcoin in Depth. I am Keren Margolis, back again to interview our genius CEO, Omar Sabek, here at Sasco Digital Assets. Hey Omar.
How are you?
I am awesome. I want to talk to you today about Bitcoin market cycles because that's what everyone flips out about all the time.
Very interesting topic.
Very interesting topic. And let's start with corrections because this is when everyone loses it. Yeah. And freaks out, and this is all the news, and this is when everybody panics. But something interesting happens during mid-cycle corrections, right? It follows a specific phenomenon that I want you to explain how these mid-cycle corrections actually work.
So we just had a mid-cycle correction. We had an event that took place on May 19th that we attributed to leveraged long liquidations. And what
Go on then, what's that?
What that means is we had such an incredible run up from mid to late 2020 to around April, May of this year, where the price went, well, if we go all the way back to March of 2020, we had $4,000 per Bitcoin, right, on March 13th. That was a massive deflationary event that was caused by the world coming to the conclusion that COVID-19 was going to be here to stay. So all the markets tanked.
Right.
Price of Bitcoin went down to 4,000. It's then recovered over the course of the year. By December, it was 20,000. And once it crossed over 20,000, which happened to be the all-time high of the 2017 cycle, and I know you just covered it, you just made a video that covered that.
That's right.
The price ran up very quickly from December at 20,000 to May 65,000. Right. So it was incredible. Yeah, It was an incredible run. It was a run that caused a lot of traders to take risk in the form of loans. So what they do is they post some Bitcoin as collateral and they use, US dollar loans to buy more Bitcoin. And which is fine. But if you go too hard, with that kind of a strategy, you run the risk if the price comes down, your Bitcoin that you put up as collateral is now liquidated, which means that the exchange that you posted it with is going to sell it. They're selling it for cash. So what happened was the price went up to 65,000. A lot of these traders were taking on this, this undue risk.
Yes.
When China announced that they were going to ban Bitcoin mining, it was enough news to cause enough investors to sell. Price started running down. Price hit a certain price point where some traders started to get liquidated. Those Bitcoins became sold on the market, and that caused the price to further go down and created this cascading effect. I think, it was May 19th, and we saw the price run all the way down to 30,000.
Right, and everybody freaked.
Yeah, everyone freaked out.
Everyone freaked. But so what was actually
happening? But it was actually a really good thing.
Why?
It cleaned out the market from speculation. There was no systemic risk on the market. There was no, you didn't see banks failing, right? It was only those individuals that took risk that paid the price. Those people got completely and utterly demoralized.
Right.
There's a saying that when a suicide hotline gets posted on the forums, then that's the time to buy Bitcoin. So 30,000 was an incredible buying opportunity.
Yeah.
And if you manage to get into that price, we're now sitting at 40,000, and there's very limited downside from here. We don't have a crystal ball. We don't know what's going to happen. But typically in these kinds of events, we and this is going to your question, we see certain things continue to hold. And what held in this case was the golden ratio.
So what does that mean? I know we've talked about this a little bit previously, and you told me that these mid-cycle corrections hold to the golden ratio, and no one quite knows why.
No one really knows why.
No one really knows why. So what does that actually mean? And what does that look like within the correction phase of the market cycle?
So the golden ratio is the Fibonacci sequence. And for those that don't know what the Fibonacci sequence is, it's a mathematical formula. It's you see it throughout nature. You see it in art. If anyone is into the cosmos into art. You see it in the galaxies. Right. It's a spiral type formation. Google it, learn more about the Fibonacci sequence, learn more about
You've seen it.
The golden ratio.
Right. It's the ratio of shell spirals, galaxy spirals.
The human ear.
Right.
So that
fingerprints. Yeah.
So if we take that spiral and we flatten it out and we make it, we turn it into lines and we take that and we project it on the price chart of Bitcoin, we get the Fibonacci lines, and we always see that, when we compare the previous cycle to the current cycle, that price will come down during the correction, but it will not violate that 1.618. And we have a graphic that we're going to show to illustrate the point.
Yes. And so does that mean for us that no correction then violates the previous all-time high? Is that what that amounts to?
That's another. That's a different. Yeah,
that is a different thing, though.
That's a different thing, though.
We're talking about the price movement within that mid-cycle correction.
Correct. So in December 2020, when we passed that all-time high of 20,000, people that study this stuff, like me, know that we're never going to go back to 20,000.
Okay.
So anyone that's made, there's a lot of people that were saying that the price of Bitcoin is going to go below 20,000. Nonsense. It's never happened in Bitcoin's history.
Right.
And the golden ratio is a little bit different. The golden ratio is the Fibonacci. So we've never seen during a mid-cycle correction a violation of that 1.618 Fibonacci level.
So that's its own thing. So if we look at the graphic that's on the screen, you'll see that during the mid-cycle corrections, that price fluctuation follows the Fibonacci sequence. For what reason?
That's the $1 million question. Literally, we don't know. So
Bitcoin
it's incredible.
Has a way of operating under the same laws of nature in a way.
Yeah, I have a theory around it.
Okay, let's hear it.
And by the way, I want to preface it that we're talking historically.
Right.
There could be at some point in the future where it does violate. But we're just in the quest to find patterns and trends to kind of make sense of this new emerging asset class. These are certain things that we find, this is in no way financial advice. I wouldn't trade on it. It's just interesting things that, that anyone could find if they're looking at the patterns and trends.
But although this is how we look to the future by looking also to the past. It's not a guaranteed, it's not guaranteed or anything like that. There's no crystal ball, but
students of history.
But this is a pattern that has existed for all of Bitcoin's history. During each mid-cycle correction, we see that it follows this golden ratio
100%.
For whatever reason.
100%.
So it's almost like it's part of nature. What does that even mean?
Yeah, so my theory is that because we are dealing with something that is completely unprecedented, and we have an asset that is perfectly scarce, perfectly auditable. We know exactly how many Bitcoins exist. It deals with supply and demand in ways that we've never seen before. If you take any other commodity, any other asset, as the price goes up, what happens? More is created.
Right.
You could look at real estate. You could look at, oil, pork bellies, right? I mean, literally everything that exists, as the price goes up, there's an incentive to produce more of it.
Right.
That can't happen in Bitcoin.
Is there something else that follows this really specific pattern in the world? Or is it, outside of galaxies, or is it really Bitcoin?
I've tried finding it and I can't. So there's other cryptocurrencies that are, don't have as much liquidity as Bitcoin. So maybe you'd be able to find it. But Bitcoin is just, has a network effect that makes it possible to see it here, I believe. It's a theory. It's
super interesting though. And I want to be really clear because I don't want people to get confused when they're listening to this and think, oh, all of the cycles follow the,
it's certainly not a law.
The golden ratio, right. It's not a law, but it's something that we've seen historical. It's an observation. And it's a really particular phenomenon that we've seen going back historically that a little bit defies explanation. We have theories, but we don't know exactly why that happens. And it is really specific to these mid-cycle corrections, right? That they follow this pattern.
Yeah, and this was a big mid-cycle correction. The last time we saw a mid-cycle correction of this magnitude was in 2013. And this is closely playing out to 2013. Not as deep and not as hard as 2013 so far. It's August 2nd today. We don't know what's going to happen in the next couple of weeks, but if the indications are compared to, if the data that we're reading right now play itself out, we're going to see supply crunch. We're going to see rapid price appreciation from here. So it's going to be interesting to see, where the rest of this cycle goes. I'm very bullish based on what's happening right now.
Yeah.
But I think it was this is another interesting. It's something that I was looking for. I wanted to see if the golden ratio was going to be violated. We were making videos saying that the price was not going to go below 30,000 because that's the 618 fib, and that's where the price is held historically. And so far, yeah. I mean, we'll see what happens in the next couple of weeks.
It's interesting. So it is a phenomenon. We're describing a phenomenon. We're not describing something that's like written into the Bitcoin protocol. We're describing the way that Bitcoin behaves loose in its natural state.
Pretty interesting stuff.
Isn't it though?
Yeah, pretty interesting stuff. It's really, I almost, think as I'm saying the words that Bitcoin has predictive power, I still don't believe it because, there's efficient market hypotheses, which is the idea that if something is known, it's known by everybody and the market already, takes it into account just naturally. But I think what makes Bitcoin a little different is that it's so new. Mm-hmm. It's, the technicians and the people that are really studying it, like me, like you're starting to do now.
Aren't I though?
It's a very small group. So it's not like it's the stock market, which is, has a huge amount of participants, globally. If you're talking about global stocks and, I can see efficient market, and I'm a believer in efficient market hypotheses in big markets, but in a very niche and small market like we have today in Bitcoin, it's possible that we have an edge and this asset has predictive power and we can start to use that predictive power to make financial decisions. I don't recommend anybody do that. If you're listening to this,
caveat,
I would say if you're interested in this kind of thing, become more sophisticated, become more educated, understand the price history, really do the quantitative analysis that you should do to get the confidence. And, I've been doing this for 8 years.
Yeah, right.
And I've been looking at this. I spend hours every day, literally, studying this stuff.
That's why you're the boss, Omar. That's why they pay you like that.
And, that's why I'm able to say these things. I don't say it I'm not throwing this kind of stuff out there.
Right. So that's an interesting little phenomenon. It's like an interesting little,
it's pretty cool.
It's like observing Bitcoin's behavior in the wild.
Absolutely. And we couldn't even say this 2 weeks ago because we didn't know if the golden ratio was going to be violated.
Wow. So it's
breaking news.
But breaking news. You heard it here first. Hit that notification bell. So the other point I wanted to get to, and this is something that we didn't cover in the bite-sized video because it is a little technical, is that and please correct me if I'm wrong, okay, that's why you're here, that the upward trending trajectory of Bitcoin's price follows a stock to flow model. Yes. So it adheres to a line that you can plot out on a graph.
Yeah.
So what is that line? What's the stock to flow model? And why does the price of Bitcoin correlate to it?
So this is another very interesting and unique aspect of Bitcoin. And again, so far it's holding true. It could break down at some point. There's a Dutch quant.
Hashtag not financial advice.
Yeah,
hashtag do your own research.
Take all of this, make your own decisions. It's all information and education. There's a quantitative analyst in the Netherlands. His name is Plan B. He's on Twitter. His handle is 100 trillion USD. And he came up with the stock to flow model, I think it was March 2019. And, so I've been studying, the blockchain and the price history for years. And when I read the stock to flow model, I immediately identified it as, okay, there's something to this because there was one thing that I couldn't really put my finger on. And there's a certain way that Bitcoin price moves through the years. We talked about the golden ratio. That's one kind of characteristic. But there was a certain kind of gravitational pull to a certain price. The price will never go below a certain price. It will never go above a certain price. It was almost like there was some kind of price to Bitcoin that was the real price. And, this gravitational pull, whenever the price shot up too far above that real price, it would pull itself back. Whenever it went down too far below, it would pull itself up.
So
right?
What is that tether? And what is the stock to flow model briefly?
So the name of that tether is called co-integration. Okay. And so what Plan B came up with is he defined the value of Bitcoin in terms of scarcity. And the value of Bitcoin compared to other assets. So he compared it to gold, silver, real estate, a bunch of different assets. And when he plots the market cap of assets compared to the price of the asset, and he plots it on a graph, you're able to see that scarcity defines the value of the asset. And I think what it comes down to is ultimately, if you have an open market and you have, people all over the world that are free to make their own economic decisions.
Yep.
Those individuals are ultimately going to make the best decisions for themselves as to where their money should go to hold that the value of that money over time. Okay. And they're going to pick the scarcest asset. That's that's what the model really kind of, validates, is the idea that through human action, people will ultimately make the best decisions for themselves, pick the scarcest asset. Historically, it was gold, because that had a very high stock to flow ratio.
What is stock to flow, though? What is that ratio?
Stock, the amount of the asset that exists in the world, flow, the rate of new supply of that asset being created every year.
So stock to flow ratio is simply the amount that exists divided by the rate of new supply.
Exactly. Okay. So let's say if
it tells us what?
It's a measure of scarcity. So if we took, for example, if we plotted gold, and we take all the gold that was ever mined out of the ground over the past, millennia.
Yeah.
Right. All the ancient Egyptian golds, King Tut's mask, you include that in there. Jewelry, industrial use gold. You get gold.
Stop looking at my earrings. They don't count.
It's beautiful, by the way.
They're for me. Okay, go on.
You get a block of gold that's about, it's a cube of gold that goes about a third of the height of the Washington Monument. Okay. It's a lot of gold.
All right. Okay? Love it.
Now, that's a stock. If you were to measure the amount of gold that's produced every year, it would take 56 years to be able to produce that same amount of gold that exists today, that big cube. Okay?
And as time goes on...
So 56 is the measure.
And as time goes on, it becomes harder to meet that stock because it becomes rarer. The asset becomes rarer.
So for gold, it's actually very interesting. I'm glad you brought that up, because with gold, mining technology has improved dramatically over the past couple of decades. We're able to go way deeper into the earth, and we're able to move a lot more earth and refine a lot more to produce a lot more gold. What's happened with gold is the price isn't going up or the price might be going up, but it's being met with supply onto the market, which is keeping the price down. And we can't really tell because it's not auditable. Okay. That's the problem with gold.
So unlike gold... That's interesting to differentiate Bitcoin from gold.
Absolutely.
Also. So unlike gold, which is, Bitcoin is fully auditable, right? So we can see what is possible to exist. We know exactly how many can actually exist.
Not only do we know how many actually exist, but we know exactly how many will exist every 10 minutes, right? For the next 120 years.
So that means that as the rate of new supply decreases over time, as we discussed in the bite-sized video, because of the halving events, the price of Bitcoin goes up, and that adheres to this stock-to-flow line.
Yes. Yeah. Well, the stock-to-flow line keeps on moving every 4 years because it gets scarcer and scarcer and scarcer, and so the price goes up.
So it plateaus a little bit like that.
Effectively,
so it's not going to go up forever. It's not linear like that.
And we can see it in the price action. Okay. In 2013, the price was around $100. In 2017, the price it went up to a high of 1,000. It was between 10 and 1,000. Okay. In 2017, the price went above 10,000. And so for the next 4 years, it kind of, it kind of stayed around 10,000. In this cycle, you hear everyone talking about 100,000.
Yes.
Why do they say 100,000? Why are they saying that? Because it's the next 10x from 10,000.
And how do you feel about that?
I don't like to make price predictions.
We don't ever.
But we've seen it go past 100. We saw it go past 1,000. We saw it go past 10,000.
So maybe.
What's going to stop it now, right?
So what is our takeaway here? So when we're talking about this stock to flow integration, co-integration, right, where we have this kind of predictive model looking backwards where we can also maybe extrapolate what might happen in the future, and also this little mid-cycle correction golden ratio phenomenon. What does that mean for us predictively?
I think it gives us a high level of confidence that, Bitcoin is on a path to ultimately, continue to succeed. It's already succeeded.
Yeah.
It's becoming more and more adopted. It's the concentric circles of investors keeps on growing.
Yeah.
So now we are at the stage where institutions and banks are, investing it. They're getting into the game, so to speak. What comes next? Sovereign wealth funds, which I think is right behind that. And then ultimately, we could see central banks start to, buy Bitcoin so that they could denominate and peg their currencies to, because ultimately, I think 1971 they came off the peg, and we ran up this incredible amount of inflation since 1971, and it caused an incredible amount of wealth inequality.
Yeah.
And I think central banks would do themselves some justice to maybe consider the past 50 years to be an experiment, and what would be some of the benefits of going to, a hard money standard, a sound money standard, for the whole world.
Yeah, sure.
And that's all speculative. We don't know.
Definitely. But these predictive tools are based in math and mathematical analysis of Bitcoin's behavior in the past. So it's not bullshit, and it's not just pure speculation or emotion. We're working with certain models here, and I think that's the point.
Absolutely. Yeah. Absolutely. We went from having no Bitcoin to having Bitcoin, and, with Bitcoin comes certainty.
And now we're observing its behavior, and we can plot it out with math.
It's so fantastically attractive for its many properties that it's becoming adopted more and more by the people that take the time to understand it. And that's leading to, these valuations and these projections. And very interesting, very exciting, very exciting to see.
Yeah. And you know what? I think that wraps it up for now. But I really wanted to get into those kind of nitty gritty, a little bit getting into the sort of math. I mean, not the
We didn't even scratch the surface. That's just
we didn't even scratch the surface. But the point is that there are mathematical models that we're using, and that this isn't just people on Twitter saying, yeah, Bitcoin to the moon. This is, we're looking at charts here, and people have done the research like yourself.
It's not Dogecoin, right?
Yeah, it's not Doge. All right, this is going to wrap it up for today. Omar, thank you so much for another awesome in depth.
That was a banger.
It was a banger. And thank you guys so much for watching this. Please leave us a comment down below. Let us know what you think about this. If you have any additional questions, we always want to hear it. We always want to address your questions and know what you want to know. Please subscribe to our channel and share this with a friend, by the way. What are you doing? Don't sleep on this content. Subscribe if you're not already subscribed. Hit the notification bell to get all of our content right away as soon as it drops. And we are going to see you in the next video. Bye, guys.